Hello and welcome everyone to the week ahead commodity report for the 19th to the 23rd of November 2018, presented by myself, Phil Carr, at the Gold and Silver Club. Last week, of course, we saw gold rebound strongly, getting some degree of a safe haven bid with all the Brexit uncertainty, and gold on Friday rising 1% as the dollar fell after US Federal Reserve officials made cautionary comments about the outlook of interest rate hikes. And of course, we have the next Federal Reserve meeting and FOMC statement now scheduled for Wednesday, the 19th of December. Hedge funds and money managers have increased their net sell short positions in COMEX gold and silver contracts after the recent rally. Meanwhile, oil prices on Friday ended the session slightly higher after a volatile trading session supported by expectations that OPEC would agree to cut output next month at the meeting at the beginning of December, though prices of course have fallen for a sixth straight week amid global supply concerns, whilst hedge funds and money managers have cut their bullish exposure to crude oil to the lowest level since June 2017, as prices of course have tumbled over the last month. So with that, we'll move over to the charts and we'll talk you through the key levels that we're looking at next. Firstly, let's look at gold, which closed on Friday at $1,221 US dollars per ounce. In fact, on the midweek report, we highlighted the potential for gold to be building up a bull flag formation here, and if we were to see a breakout above the bull flag, we could get a reasonable move. And in fact, at the highs here on Friday, gold broke out to $1,225 US dollars, and that's after last week revisiting just below $1,200 but getting supported. It was an important level for gold to hold over the last week, as was $14 for silver on a closing basis. And we'll take a look at silver very shortly. So as we go into next week, gold does look reasonably strong here, not only on the daily chart, but also on the weekly chart as well. You can see the potential for more follow through if we break above the weekly highs going into next week. If we were to get some additional follow through next week, we could see a revisit back towards the recent swing highs, which would position gold at 1,238 up to 1,243 if we do get follow through. So we do need to see the price action essentially break above the neckline here, which has been formed from actually the sell-off after the FOMC statement, which was just over a week ago, where Jerome Powell was relatively hawkish. However, we've now seen a complete recovery from that FOMC statement, with the price of gold back at $1,225 US dollars. On the flip side, if we don't get follow through and we see a reversal for gold going into next week, we could see the potential for a revisit back towards $1,200. That's only if gold wasn't able to break above the neckline here and continue this momentum. Week to week, gold is moving within approximately a 25 US dollar range or 250 point range. So if it was to just stall at this zone, roll over, it could easily come back towards $1,200. At the same time, it's closed at $1,221. So a breakout to the upside, I would have a target of $1,240 to $1,245. Now moving over to silver, very much like gold, and again we discussed this on a midweek report where we were seeing the potential for silver to recover the losses from the FOMC statement, where of course we saw the dollar break out to 16-month highs, and this caused this sell-off with silver taking the price back towards $14. It was important for silver to hold that level, and on a closing basis it broke and closed back above $14 on Wednesday. We've got this three white soldiers formation, or 3 days of follow through here essentially, and we're right back at the 50-day moving average. So next week will be important again for silver to see whether we will get additional follow through and potentially break back towards the previous range here between $14.40 up towards $14.90 if we were to see follow through. So next week I would again have a look at silver on the weekly chart here. If we do break above the weekly high, and we've certainly got the potential here with this price structure to follow through, but we do need to see a bit more confirmation. So if silver is able to break above the neckline, we could get some reasonable follow through to the upside. Again, on the flip side of that, if silver just holds around the resistance at the 50-day moving average and the monthly pivot, it could then roll over again and revisit back towards $14. So it really depends on whether we get follow through, and I would definitely have this on the watch list as we go into next week. And then moving over to crude oil, as we discussed on the midweek report, $55 US dollars per barrel has been a very important level of support here, and that is in fact quite a critical level going back on the chart here all the way back to 2017, where we saw a lot of resistance at that zone, which then provided support to springboard higher after a breakout at the end of 2017, and we found support again at $55 US dollars per barrel. Over the last 3 days, we have seen a bit of a shift here for oil prices. In fact, During the US session yesterday, oil was up over 2% on a breakout back towards $58 per barrel. We have now had 3 days of higher highs and higher closes, and it still looks like oil could get the potential for a bit more follow through as we go into next week, as long as we continue to hold this positive price structure, because we have still got the potential for what could be considered a bear flag. If we were to roll over and sell off, we could see a continuation of the downward trend and revisit $55 per barrel. But on the flip side of that, of course, we could then retrace higher, have another attempt to break above 58, and then recover some of this move over the last week, where we saw a very extreme sell-off here, over a 7% move to the downside after $60 was breached at the beginning of last week, which took the price, of course, down $5, down to $55 per barrel. But if we can build some additional momentum at the beginning of next week, certainly we could get a revisit back towards the upper end of that range where the price structure did break down from. I would keep an eye on the following as we go into next week. Essentially, on the 4-hour chart, we have this pennant formation in development, and where we're at the moment, we retraced on some profit taking here on Friday after coming into resistance just around the weekly pivot, and we've produced a rejection candle just at the lower end of this channel. So essentially, if oil was to follow through and if it was able to break back above this resistance and break above the weekly pivot, we have a fair amount of clean air here for oil to rally if we were to see some degree of follow through from this price structure. So if we do penetrate back above Wednesday, Thursday and Friday's highs, this is where we could be on track for a breakout here with oil. On the flip side of that, of course, if it just turns out to be a bear flag, and if we were to break back below this channel, which we've been forming here on lower time frames, we could then come all the way back towards $55 per barrel. Bear in mind too, next week is Thanksgiving in the USA, and of course Friday is Black Friday as well. Typically this can give rise to some exaggerated moves in the market, and often actually some big trading opportunities. A lot of traders may not be expecting large moves here towards the end of next week, but often it actually can lead to large moves on commodities. So I would keep an eye out for that as well, and of course stay nimble. And if you would like to find out more about becoming a private member of the Gold and Silver Club and joining a community of successful traders, there is an opportunity for you to do so. If you would like to join us at the Gold and Silver Club, you get access to the following. So you have live trade alerts. Those are delivered to you via WhatsApp, email and SMS. You have access to mentorship, expert advice, in-depth market analysis and trusted insights, so you can know earlier how to act quicker and maximize your return on every trade opportunity. For more information, please visit www.jointhelivetradingroom.com. The link is also below this report in the description. So just click on the link, make an application, and we will of course get in touch with you ASAP. And of course, make sure you subscribe to our YouTube channel. That way you're kept updated with the latest commodity reports.